It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, hope the weekend is going well. Well, maybe a little bit better than me. I woke up with a screaming headache at 5 o'clock this morning, and then I realised on Saturday afternoon I didn't have that second cup of coffee, and it happens to me every time. Does that happen to you if you're a coffee drinker? I mean, I only drink 2 cups of coffee a day. My scorecard is somewhat lacking if I can't count up to 2, right? But as soon as I had that coffee this morning, boom, the headache disappeared. I hope you don't have any real estate headaches waking up this morning after missing out yesterday on some properties around the country, because there will be that disappointment in the air on our Sunday morning. And it is May the 25th, and we had another busy real estate week. Started off with Alex Rutherford there in New Farm in Brisbane on Monday, and talking about a listener who got divorced after 25 years of marriage, and that is not an uncommon thing. Steve Williams spoke to us from Port Macquarie. He and Tanya, they swapped Sydney's buzz for the serenity of Port Macquarie. We catch up on that conversation. Maddie Visser from Adelaide, we talked about the rate cut with Maddie, and also Nicola Powell from Domain was here, and we talked about how far dwelling values rose in the last 10 years and what has happened in that time. So that is all coming up as we reflect back over the last 7 days.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
You say that you are moving back to your family town of Perth after being married for 25 years. Divorce, you said, at your age isn't what you had planned in your 50s, but will downsize into an apartment. You say that you consider yourself lucky enough to come out with enough money from the sale of your family home to buy again. Yes, it's an issue that has faced a lot of women when divorcing, which we have covered a few times. Women raise, of course, families, often foregoing their careers. The equity and balance in a divorce scenario is often unfair, especially around the real estate outcome. And many women are simply unable to buy again, and then, unfortunately, they enter the rental property market. But as I say, many women just are not in the situation to buy again. Is that something that you have experienced with some of your clientele there in Brisbane?
Yeah, so we are certainly seeing, unfortunately, middle-aged women that are coming out of divorces or even younger than that are now looking at maybe buying a home and have had to sell the family home and split the equity out of the family home, which gives them, $600,000 or $700,000, which unfortunately doesn't buy them anything significant in Brisbane now, and sometimes they've got dependents of 2. So it is definitely a growing concern, and it is a dilemma definitely that we're experiencing more often than not now.
Yeah, I think the other problem is, if they need a mortgage and they haven't really skilled themselves or upskilled themselves because they've been busy raising the family, that is a bit of a problem going back into the workforce, not being able to service the mortgage.
It is a real problem because also they're trying to, still look after the children. They haven't upskilled. They're working casual hours in some regards if they have got work. It is definitely what I'm seeing, and I talk to quite a few women because I'm of that age. It is a growing number of women definitely in that sort of 35 to 65-year-olds that unfortunately aren't able to re-enter the property market.
Yeah, I've mentioned this before, there's a very good documentary. I just can't think of what it is called. It is on Netflix, and it shows you some of these women, and they're living in vans. And there was one woman, she's living in a car, was married, and unfortunately can't get onto or back into the property market. Very, very sad situation. Right, let's turn our attention to you there in New Farm and the areas that you service. In Brisbane, still got this problem of low amounts of property being listed. Now, I know that we've had some public holidays, but you'd think that that would start to shake itself out by now.
Unfortunately, we'd love to have more properties for sale, but we're still finding that the stock levels are very low. We have had that succession of very long weekends, so about 5 long weekends, and also school holidays along with that and Easter. So it has been a bit of a distraction, but the amount of buyers that are still visiting open homes are way off the charts. We're still experiencing huge numbers, but the stock levels are still quite significantly down. Good properties are selling very well.
You're talking to us from Port Macquarie. You've moved to Port Macquarie. So where did you move from, Steve?
We were in Botany in Sydney.
And tell us the story. So you were there in Sydney, you saw some sort of light, did you, and decided to move out and a little bit more of a easier, peaceful lifestyle?
Well, we always had an idea to move away from Sydney when we retired. We'd paid off our mortgage and there was no point putting money in the bank because the interest rates were so low. So we looked up and down the coast, found a place in Port Macquarie with a view of putting a tenant in. But that wasn't very successful. The tenants were real pains. They then left without any notice and we just couldn't face doing it again. So we moved up early, maybe 3 or 4 years early. In many respects, the tenants did us a favour because we've never looked back and we love it up here.
Yeah, one of the things, of course, that doesn't hurt when you're moving out of a Sydney to Port Macquarie is just how much you've got in the hip pocket. That's always nice.
Oh, absolutely. We sold a very small 3-bedroom old place in Botany, moved up here. We found downsizers because we moved to a 5-bedroom, very expansive place with plenty of money still in the bank. So it was a good move.
All right, well, that sounds like you have found the idyllic spot. Not quite retired, though, just yet.
Yeah, so both running businesses, we can, rather than just working and then stopping, we're able to sort of cut our work down. And Tanya works 2 days a week now. I work a bit more, but I can generally work from home and generally fit it around other things.
I guess because of the connectivity that we talk about all the time, the infrastructure, of course, in smaller regional towns, I mean, that does make the difference. As you say, working from home, you go back in time, you probably couldn't have done that in the past.
No, absolutely. And COVID has pushed that along a lot. I do some legal work. It's now acceptable to, they run court cases over the internet where people can't get to court, which was unheard of before COVID. Tanya works in healthcare, and again, all of her appointments these days are on telehealth. And in fact, a lot of her clients don't even know she's moved from Bondi. She just put the same picture back behind her. Many don't even know that she's sold her office and moved up.
Now, what have your other friends said about you moving into Port Macquarie? Are they jealous, envious, or are they saying, why did you do that?
Those friends came up every weekend in April. We had 4 sets of families for every weekend in April, just to, come up and taste the lifestyle, see the koalas that live in the trees next to our house. Yeah, I think, we miss them a bit. They miss us a bit, but we're backwards and forwards to Sydney a bit, so we see them from time to time. Most of our friends are a bit younger than us, so they're not quite envious yet, but I think when their time comes, they'll certainly consider it.
Number one thing which has been the absolute best thing of moving out of Sydney?
The pace of life. People are much friendlier. They have time. It's not a rat race. We find ourselves, every time we go out, we turn up 15 minutes early, because we just can't believe that it only takes 10 minutes to get everywhere.
All right, well, it sounds like everything is working out for you and Tanya, your wife there, making that move from Sydney into Port Macquarie. Steve, thanks for sort of running through how that all came about, and happy days. Good luck there in Port Macquarie, and thanks for sharing.
Thanks, Craig. Thanks for your time.
Well, right now, let's go to Adelaide and catch up with Maddie Visser, who is there, and a very busy mortgage broker. Good morning to you, Maddie. Welcome to the Real Estate Breakfast.
Good morning, Craig. Thank you for having me.
So what about that? Those two really busy bees, Shane and Amanda, that 5% contingency. Is that something you've heard of before?
Well, look, I think it's rare now. Currently, it's quite hard to save and then have a buffer on top. What I've seen in the past is we've had clients approved for more, but they've chosen to lend less, and that's been their buffer. However, when they're talking about keeping a buffer in an offset facility, I think that comes from a lot of uncertainty in the market, what we've seen with interest rates. And now clients are wanting to hold those extra funds in case of emergency, whether it's an emergency for the property or whether it's a personal emergency. I am starting to see people want to hold a little bit of a buffer in their savings account or alternatively store it in their offset facility.
Yeah, it's interesting, isn't it? Because if you sort of look at this period of time where we are right now, oh, by the way, this is what happened yesterday.
Hot off the press and good news for existing mortgage holders and those trying to get in the market is that the RBA have cut the cash rate by 25 basis points from 4.10% to 3.85%. So that is good news. Not unexpected, but they've done it. Essentially, it's on the back of inflation coming back into target range of 2 to 3%. What does this mean? If you've got a mortgage of $750,000, you're going to save around about $125 a month. So that's good news for mortgage holders who've been through a lot of stress and strain over the last 12 to 18 months.
Would you agree that it's probably the conservative decision by the RBA, because many were maybe expecting that 50 basis points? Certainly mortgage holders were hoping that it might go as high as 50, but maybe a little conservative?
Oh, look, I don't think it was so much conservative as I think it's a measured decision. There's still some caution around inflation. There's some policies from the re-elected government that might stimulate some demand. Retail numbers are strong, consumer behaviour and confidence is growing. I think it's a good, measured, sensible decision on the back of where inflation sits, but also managing the potential risk of CPI climbing again.
So, yeah, that is what happened yesterday with the rate cut by the RBA. Yes, it's interesting, isn't it? Because if you look at this moment in time, Maddie, it can be argued that we're in a safe period of time, but we're not really, because we never know what is going to come out of left of centre. If you go back pre-COVID, nobody saw the COVID on the horizon and what was going to happen, and then as a result, all of the prices going bananas. So it can be argued, oh, well, this is kind of very, very safe, sort of getting a contingency budget. Is that required? But we have to say, well, let's err on the side of caution.
Well, that's correct, Craig. I mean, look, I think not everything is also about interest rates. I mean, the cost of living is high. There's uncertainty still from COVID. Having that buffer there, a lot of people can't achieve it. But if you can, I think, it's wise.
Yesterday's RBA cut, however, is likely to throw some more heat into the market. What do you think?
Absolutely, Craig. I think we're seeing a reawakening. People have been preparing like they did in February. They're preparing for rate cuts before they had even landed. But now after yesterday's announcements, we're getting an influx. People they're ready, they're hungry, they're wanting to get back into the market. Pre-approvals are up, especially among second home buyers who may have sat out the uncertainty of last year. Refinances are also hungry for better rates and structure. This is creating an influx of interest in the market again.
A very good morning. Look, I think it has been a big week. It's almost been like Christmas for those who have a mortgage, welcoming that rate reduction. And I think that, our expectations has been for multiple rate cuts over this calendar year. And I think particularly after Trump's Liberation Day, that really did alter the interest rate expectations, not only globally, but also domestically for Australia. And what you've got is the markets are pricing in multiple rate cuts over 2025. Our expectations, I think that we are going to see more rate cuts coming through. And so what we're likely to see is the impacts of the reduction in the cash rate are going to be amplified through particularly Sydney's housing market more quickly than some of our more affordable capital cities. So we think that it is going to provide a little bit more momentum into price growth. And it's been interesting, even when we think back to that February rate reduction, we were already seeing buyers reacting to even that rate reduction prior to it being delivered. Because if you remember that period of time, we were all like, it's going to happen very soon. And we started to see really buyers coming out. And the consistent trend overall has been an increase in buyer inquiry. So that does tell us interest is rising, and particularly in, I think, a market like Melbourne, which has been undervalued and underperformed for many years now.
Yeah, and just having a look at the prices that I mentioned over the last 10 years, you have a look at a Sydney, they're at a minus 1.1%, still sitting there at 61.6% rise. But my goodness, you look at a Brisbane, over 91%, Adelaide over the last 10 years, 93%, Perth at 55, 86, Hobart, you kind of quietly forget about them, and regional New South Wales absolutely on fire, 97.5%. Some big moves there across 10 years.
Yeah, we have seen some big moves, and really most of that growth is really kind of that past 5-year period, particularly when you're thinking about those cities such as Brisbane and Adelaide and Perth. You know, we've seen all of these markets see strong growth in recent years. And if we separate out the figures there, you were talking about our dwelling prices, if we separate out for houses and units, this is where you start to see the real difference in property type performance. So when you look at house prices in Brisbane and Adelaide, they've increased by over 100% over 10 years, almost like 110% in a 10-year period. But when you look at units in Brisbane and Adelaide, Brisbane units are up almost 70% and Adelaide units up 90%. So we've actually seen a bit of an outperformance of house prices relative to unit prices in those two capital cities. But you know, they've really been leading the way in terms of price growth, and you know, particularly Adelaide. Adelaide's been this kind of unstoppable property market. It's been quite wild, really, I think, to watch what has been always dubbed Australia's quiet achiever for the last 35 years. That has been Adelaide's housing market, but it has absolutely smashed that expectation over the past 5 years and has really been one of the capital cities that has been the standout performer.
We connect you to the best real estate information across Australia. The Real Estate Podcast.